All right, good evening, everybody. Happy Sunday and welcome to Q4. Yes, it is officially October. Today is October 2nd, 2022. Now, the significance, I guess, of tomorrow, really, it is the first business day of the month, the first business day of the quarter. It is Q4. We are in the home stretch. Now, I cannot believe that it is almost the end of the year, almost 2023. It's insanity. Anyway, we have a lot to talk about tonight. Welcome to the Market to Look Ahead stream. So every single Sunday night at 8:30 Eastern Time, right here, live on Walks on Wall Street, we break down day by day the main events that are happening on Wall Street for the week ahead. And let me tell you, this week is going to be an absolutely action-packed week. Okay, we have everything from the Institute for Supply Management. We are going to get some jobs data. Important earnings are going to be coming out. We are also going to be hearing from the Bureau of Labor Statistics, and we'll touch on a little bit of housing data. But what I wanted to sort of touch on right now, obviously we do this every single Sunday night, is have a quick peek at the futures market. So if we look at ticker symbol ES, which is the S&P 500 E-mini futures contract, we're down about 22 points, trading at 3,579. And if you guys want to follow along, a great website to do this for free is called tradingview.com, where you could actually look at futures prices, commodities prices, regular equity indices for free in real time. If we go over to the NASDAQ 100, NASDAQ 100 is taking a beating, down about 114 points, a little bit over 1% to 10,919. And then lastly, if we go to ticker symbol YM, which is the E-mini futures contract for the Dow Jones Industrial Average, we are down about 135 points, 28,666. So everybody, thank you for joining. Hopefully you had a very restful weekend. We are going to get started here in a minute. Just let me put my laptop away. We are going to be walking to Brickell, but I want to take a quick lap around where the brand new Citadel Securities office will be built. So we've got some news coming out of Ken Griffin at Citadel. He put out a statement sort of saying a couple of the things that he wants to do in Miami as it relates to investing in education here, as it relates to investing into job growth and technology. So we're going to talk about that too. But as of now, sit back, relax, and enjoy the live stream. I'll say hello to everybody in the chat in just a minute. Just have to put my laptop away. Okay, and we are officially started. So let's see who we have in the chat tonight. Happy Sunday, everybody. I see Sweet Country living in Michigan. I see Austin City Limits. Sanjib is here. Jay is here. The one and only ABX girl from the Bronx, now living in the Carolinas. Hopefully all is well with the hurricane. Sabrina Fair is here. Says happy Q4. Indeed, happy Q4 to everybody. First business day of the month tomorrow. It should be exciting. Corvette Girl says good evening, Tom. Welcome, welcome. We are reporting live from the 200 Southeast Financial Center here. This is the WeWork building. Now, I'm the only one in the office, but there was a couple people here today. And a little bit of a hack. If you want to really focus and get a lot of work done, the best time to do that is on the weekends because nobody is in the offices. So a little bit of a pro tip there. I see Vonda Howard, my friend Paul Greenwell. Good to see you, Paul. I see Fred X. Good to see you, Fred X. Abdullah is here. Mohammed, Dusty Cole, Adriana Parag is here. Let us head down to the lobby. Ooh, this is the unlucky elevator. I'll tell you guys a story about that later. Anyway. Hey, Nirvana Fan 500 says good morning. Good to see you. Dusty Cole says, what a great looking office. I appreciate that, Dusty. Harry Connors, the Citadel boss, sold his Chicago condo for $11 million. Yeah, I mean, it seems as if Ken Griffin is making a big push towards investing in Miami, Florida. Obviously, he has closed down the main headquarters in Chicago for Citadel Securities, now moving that to Miami. And an interesting fun fact, we were in the WeWork just a second ago. And if you notice on the one side where I was at, it's sort of like the community space. Anybody could really work and get stuff done. But on the other side, we had Citadel Securities purchase the entire floor. I think I have to let these people in, just give me a second. So on the entire other side of the floor, we actually have all of Citadel Securities working here. Hey guys, how are you?
Where's the CVS?
Oh, the CVS is not in here. Like CVS Pharmacy?
Yes.
Like the corporate headquarters, or this like a regular CVS?
A regular CVS.
Oh, it's right here. So if you come with me this way. If you continue to walk down this road, just continue, you're gonna slam right into the CVS.
Okay.
There's one here, and there's also actually one right here, I think. Let me see.
Yeah, we know that one.
Yeah.
That one, we didn't find the stuff we are looking for, so we'll try other CVS.
Oh, there is another CVS here.
Okay, thank you so
100%.
much.
So if you just walk directly down, it's probably 2 blocks up.
Okay.
Yep, no problem.
Thank you so much.
Absolutely. Thanks, guys. So here is the 200 Southeast Financial Center. And speaking of Citadel Securities, I think I've said this many times now, but the temporary office of Citadel is right here on the other side of the WeWork offices. I think they bought out the entire floor, but that's actually where we're going to be walking to tonight. We're going to walk all the way to the financial district here in Brickell. We're in downtown Miami now, so we're going to cross over the bridge, and we are going to be checking out the location where they will be building that brand new Citadel Securities building. Dusty Cole is here, welcome. Jeff's the city guide. Tom, what's up, Jeff? Yeah, I'm a pretty good tour guide for the city, but anytime we're talking about the Metro Mover, it's a lost cause. I would not take any of my advice on the Metro Mover. Dan Zhang is here. Says, Tom, oil price just spiked more than 2% because OPEC Plus might cut by 1 million barrels a day. So I did read that in the Wall Street Journal. Now, another thing I wanted to note, to Dan's point, makes a very good point. I don't drive, so very seldom do I pay attention to the actual prices at the pump. But I think I'm going to start paying attention just for the sake of, talking about it on the streams. So I was on the bus and we passed by a gas station, and here in Miami, Florida, I think this was right on Biscayne Boulevard, it was $3.99. And being that, I think crude oil, if you look at ticker symbol CL, so the Crude Oil Futures contract, I think we're trading at around roughly maybe $85 a barrel. So we've come down materially or substantially, but I wonder how much it is in your guys' neck of the woods. So here in Miami, Florida, from the 2 gas stations that I passed by today, it was $3.99, almost $4, which is very expensive. Very, very expensive. Hey, Abdullah is here. Good to see you. Sabrina Ferris says, Tom, why would you head to WeWork instead of just working from home? It's a good point. It's a good point. Sometimes I get environment fatigue. I know that may sound crazy, but I do. I get really crazy amount of environment fatigue. So if I'm just sitting at my desk and at my house and just sitting in my home all the time, I find myself becoming less productive for whatever reason. And also in the WeWork, it allows me to meet a lot of interesting people, because unlike a traditional office, right? So when I worked in my previous tech company, it was only my company on that floor, right? So I was only able to network with my coworkers, but in WeWork, you can network with people from literally hundreds of different startups. So I meet people from the technology background, from the fintech background. It's a really interesting place to go to, I guess, to just have a different work environment and to network as well. Jay Sully says environment fatigue makes total sense. Plus you can network. I've been remote 10 years, gets boring AF. Yeah, Jay Sully, you're right. Also, I have a quick update for you guys. Jay Sully. So a quick update. So I remember yesterday we were talking about WeWork in depth, and I said it's about $350 a month. So it's actually not $350 a month. I have an updated price for you guys because I actually just got the bill. It's actually $299 a month. So it's cheaper than I originally expected, which is great. So for $299 a month, you can work from any WeWork location you want in the world, not only in the United States, but globally. And that's 24/7, 365. So in theory, let's say if you're working hard on building a startup, you're really grinding it out. In theory, you could probably sleep in the office. Now, I'm not telling you to do that. I didn't say that. But, you know, I'll just leave it there. So if you are a startup founder and you're looking to cut costs at all costs, $299, you could work from any office in the world. You have a full kitchen, bathrooms, some of them have showers and gyms. I don't know, sounds like a pretty good deal to me. Cooking, says Tom, do you get private space or is it with other people? So the vast majority of it is with other people, right? It's like a co-working space, but they do offer individual office space. Now, I originally wanted to get an individual office space, but I wasn't looking at it in the 200 Southeast Financial Center, which is the one right here. I was actually looking to get an individual office space in the Brickell City Center location, which is right in the KPMG building. And to give you an idea, a very, very small office space with a city view was about $800 from what I remember. Now, to me, it wasn't worth it because even though I have my own space, I could leave my stuff there overnight. The problem is you're secluded to that one space, right? And since I travel back and forth between New York City and Miami so much, it's definitely not ideal to have just a single office space to spend $800. I'd rather spend the $299 and get to stay anywhere, but it's a good question. Hey, Lila is here. Good to see you. I see Bernard Friedman says, hey, Tom, good to have you here. Thank you, Bernard. Austin City Limits is here. Welcome. Lila says, that's cheaper than a lease on a building and you can go anywhere you want. Seems like an awesome deal. Yeah, and I think that's why, you know, we've been talking about how I think the pandemic has inadvertently saved WeWork's business model. Because WeWork was in some serious financial trouble for reasons which we've talked about before on the stream. Mainly because the CEO, maybe not the best manager, definitely a good innovator, but maybe not a good manager. But we are standing right under the beautiful Aston Martin building here that should be completed relatively soon. But before I forget, I'll quickly show you guys this. Check this out. So right above the icon Brickell, you could see a huge bright, I guess you can consider that a half moon, maybe not half just yet, but definitely an awesome view nonetheless. Ken Glass is here. Welcome, Ken. NG says, hello, Tom and friends. Good to see you. Vonda Howard says, plus you can use them for a business address as well. Much better than a P.O. box. Yeah, you're right. So Vonda Howard, 100%. So the way it works with the getting mail to your WeWork, you can only send the mail to your home address. So you sign up under one location, which is your home location, but you could still use any one you want. So I'm gonna show you guys over the fence here. This is the completed construction of the Aston Martin building, and they're actually redoing the river walk. So I'm gonna show you guys and let me know how it looks. So this is going to be the main lobby, but they're extending the entire Miami Riverwalk to go right past the building. Yeah, FredEx is like it's got a Flatiron building vibe to it. It kind of does. Really interesting. 61 says they're going to build a water feature to the Riverwalk. That should be really interesting. So I wanted to bring this up before I forget tonight. So there was a really, really good article in Barron's over the weekend talking about a potential Fed pivot. Okay, and if you remember back to last night's live stream, we were talking about the Bank of England. Now, the Bank of England was forced to turn its hand, if you will, because of a huge reeling in their currency markets, reeling in the credit markets, the bond market, and it forced the Bank of England to actually come in here and start buying bonds again, which is what you call quantitative easing. And the Bank of England was actually taking a relatively hawkish stance, following right along with the monetary policy leader of the world, which is the Federal Reserve. And essentially what this Barron's article was saying is that there may come a time where the Federal Reserve may be forced to pivot as well. And they were talking to some market strategists and market analysts, and they were predicting the exact levels of when that pivot may come into play. And here's sort of the thought process behind that. And let me know what you guys think. And I'm going to post the article in the Discord at the end of the chat. And essentially, the market strategists who they were interviewing in the Barron's article said that the Fed is not going to pivot, but they will pivot if they are forced to pivot. Okay, in other words, if there is a lockup in the credit system, essentially if you have a cataclysmic event which happened in England, in which case the Fed has to step in, or essentially the financial markets fall apart. And they're projecting that point in time may come around when the 10-year US Treasury yield gets up to about 4.5 to 4.7%. That is when, to use their terminology in the Barron's article, and I really, really highly suggest everybody to check this article out. Once again, I will put it in the description of the video as well as the Discord. I was just a little bit too lazy today to program the Nightbot. But essentially, many market strategists are projecting the point in which the Fed is going to be forced to pivot right around 4.5% on the 10-year US Treasury yield. Now, I think right now, oh, check out this boat that's coming by. That's a pretty nice yacht. And we got the drawbridge up. Very nice. So, as of right now, I think the yield on that 10-year US Treasury is about 3.7%. We briefly, for a moment, hit 4%, I think Thursday, but we quickly came down. And the article essentially was outlining a very interesting topic that, quite frankly, was ironic because we were talking about it yesterday, when it has to do with moral hazard, right? So in 2008 financial crisis, the terminology moral hazard was being thrown around all the time. This is an unbelievable boat here. You guys see this? That thing looks like a James Bond boat. Hold that thought. Check that out. That thing is sick. Yeah, time lapse is like Batman's boat. That's crazy. I've never seen a boat like that. Sorry for the distraction. But essentially, in the great financial crisis, when the Federal Reserve and the taxpayers essentially bailed out these investment banks, the terminology moral hazard was being thrown around. And essentially, to sum up sort of what moral hazard is if we continue to bail out these banks, there'll be no sort of incentivization structure like you have in free market capitalism to say, if you do the right thing, you will be rewarded. So essentially, leading up to the great financial crisis, a lot of these banks took on an extreme amount of credit risk, lending to people who obviously couldn't afford homes because they just wanted to get the deals done and make the commissions and so on and so forth, which turned out to crash the global economy. So if you have no precedent in place to say, look, if you do something that's risky and you lose money, we're not going to bail you out. If that is not the precedent, what is stopping people from course correcting their behavior? Does that sort of make sense? And I think you're seeing this not only at the institutional level, but at the retail level as well, because you have a lot of retail traders over the course of the last maybe 2 to 3 years saying blanket statements like stocks only go up, buy the dip at all costs, buy the memes, these crazy meme stocks, because the Federal Reserve will always be there to go money printer, go burr, right? There's even memes about this now. And that all relates back to this moral hazard where this isn't free market capitalism anymore. If you have the Federal Reserve, whenever the market starts to reel and the market starts to go down and the credit markets start to freeze up, oh, that's fine, because the Federal Reserve will just come in and start buying massive amounts of bonds to provide liquidity. Well, then why should people manage their risk? Why should people do the right thing? That was essentially the moral hazard. It won't teach these bankers a lesson because in their minds, it's, oh, I could do whatever I want because the Fed is just going to bail me out. Right? So this time around, as the Federal Reserve is pushing ahead with quantitative tightening, Fed Chair Jerome Powell, Minneapolis Fed President Neil Kashkari are really trying to set the standard to say, look, there's going to be no Fed put this time. We are going to do everything we can to get inflation under control, and that means leaving interest rates elevated for some time. So as this relates to the Barron's article, even though the Fed is sort of saying this, there could come a time, and many analysts are predicting when the 10-year US Treasury yield hits about 4.5%, the Fed will be forced to pivot, or else there'll be a cataclysmic meltdown in the debt market, in which case you get a massive credit freeze. So it's not that the Fed wants to pivot, they may be forced to pivot like the Bank of England. So please check out that Barron's article. I think you guys are gonna love that. Hey, what's next? That's a perfect example of why Glass-Steagall needs to be brought back, says what's next. I agree with you, what's next? I think you make a good point. So everybody, right now we are, I guess this is still considered the Miami Riverwalk. We are on the other side of it though. So usually when we're live streaming, we're streaming walking over this bridge. And then we do a little bit of a tour of the Icon Brickell. But now we are on the other side. And we will walk down here. This is the Metromover track that we were on last night. So this is the right track that we have to get on to go over to Brickell. And this is the very famous pier on the Walks on Wall Street channel where it looks like Jaws took a massive bite out of it. Hey, Miss Brown Eyes is here. Good to see you. Thank you for joining. Vinny Castellano is here. Sabrina Fair. Cindy Foley. Welcome, Cindy. D, welcome. Hey, Daryl says, hey, Tom. I did. I was watching them earlier today. D says, Thomas L. along the Miami River on the side. Hey George, hey Tom, did you know that Super Tall is gonna go up right next to the Southeast Financial Center? It's not approved yet, but it's gonna be called One Bayfront Plaza, should go up in 2030. Yeah, so George, that is insane. So an interesting piece of news here. In the Next Miami, I think Next Miami is like a big magazine here that highlights all of the new and innovative real estate that's going up here in Miami. So they actually featured one of Action Kid's videos where right next to the office where I work out of the 200 Southeast Financial Center, there's that really, really disgusting broken down building that is just not a good look for downtown Miami. But supposedly they're supposed to demolish the entire thing and build a massive, massive super tall tower that I think is going to be mostly office space, maybe some residences, and I think a hotel, if I'm not mistaken. And it's going to have like a bridge platform to the Metro Mover. It's going to be awesome. So if you guys want to check that out, I think they actually featured Action Kid in the Next Miami. George says, yes, Tom, the Next Miami is the best for architecture on what's going up in Miami. Love that. I see Caroline is here. Says, hey guys, good to see you, Caroline. We're just hanging out by the water. It is October 2nd, okay? So everybody, this is very, very important. This is the official start of Q4. So hopefully everybody's Q3 finished with positivity and success. We are now approaching the final 3 months of the year. So I cannot believe just how fast time has flown. So with that said, that means we are going to venture into earnings season, okay? So whenever we enter into earnings season, obviously for those of you who have been subscribed to this channel for quite some time, we do deep dives into all of the major companies. So whenever a company is reporting earnings, especially if they're a notable company, we do a deep dive and break down those earnings reports. But on the first business day of every month, I think this is the most important thing to talk about tonight. On the first business day of every single month, the Institute for Supply Management will release their PMI numbers. And I think consensus on Wall Street is for about a 52 reading, which actually should be a little bit of an incremental increase month over month, which is good. And here's why. So usually when you have a reading above 50, that signals growth in the manufacturing sector of the US economy. Okay, a reading below 50 signals contraction. Now, if you've been watching the streams for a while, you know the correct way to interpret the PMI numbers. It's not just to look at the numbers face value and say, okay, this is good, the manufacturing sector, the economy is expanding, so we are gonna go long the market or something like that. What you need to look at is the trajectory of those PMIs, right? So there's actually a direct correlation, interestingly enough, when the major US indices, you could think about the NASDAQ, the Dow Jones Industrial Average, and the S&P 500, they topped and started rolling over right as the PMIs started rolling over, okay? And this is because the Institute for Supply Management PMI numbers are essentially a real-time look into the business cycle. You're literally looking at the business cycle in real time. So one of the things that I recommend is if you can actually plot on an Excel spreadsheet or something like that, a line chart of the PMI numbers, what you found is that in January of 2022, we had a PMI reading of about 58. And then each month after that, we've had steep deceleration all the way down now to about 52 in the PMIs. And not surprisingly, we had the S&P 500 and the major equity indices roll over in succession. So this could be the start of a new uptrend in the PMIs. I think consensus on Wall Street is for a 52 reading. So I think it's going to be very, very critical and important to make sure that we not only pay attention to the number and say, okay, if it's 50, that means the manufacturing sector, the economy is expanding. That's not enough. We need to be looking at the trajectory of those numbers and make sure they're turning up. So that is going to be out tomorrow, which is the first business day of the month. So just keep that in mind. Oh, I think this is the... Oh, I thought this was the Coast Guard coming here for a minute. Hey, we got Dusty Cole here. Good to see you, Dusty. Welcome. Andy is here. This is interesting. I think these guys are towing some sort of a jet ski. And you can see Brickell City Center in the distance. Dre Parks, this quick question. Are you buying puts right now? I am not. I am not. What about you? Hey, thank you so much for the 20 SAR. Thank you so much, all of our friends in Saudi Arabia. We appreciate it. Thank you for supporting the channel. James V says, hey Tom, James V checking in. Super rainy here in New Jersey. Well, stay safe. I think New York and New Jersey are getting the tail end of this Hurricane Ian, so hopefully not too much rain. Bacchus Schmill says, Tom, which city is busier, New York City or Miami, for your observations when you walk around? Busier? I don't know. I think in terms of foot traffic, New York City is a lot busier in terms of foot traffic because New York City is a very walkable and historically a very walkable city. Not many people own cars if you live and rent in Manhattan. But the biggest difference that I found out about Miami is everybody here, except me, pretty much everybody except me, owns a car here. So when you walk around the city, especially after probably 7 p.m., there's almost no foot traffic besides if you're walking here, which is the sort of Brickell area of Miami, which is a sort of like they call the mini Manhattan is what they call it. So I would say foot traffic wise, Manhattan is always going to be a lot busier. But if you go to like restaurants and things here in downtown Miami and Brickell, it is always very busy. It's just the public transportation infrastructure is not as broad-based in Miami as it is in New York. So there's a lot less foot traffic here. Hopefully that answers your question. Also, another thing I would like to say is it is now the start of October, which means we are probably going to start to get a lot of these snowbirds coming in from the Northeast. You could think about a lot of the New Yorkers, Long Islanders, people that live in Boston, New England, are going to start coming down to Miami, Florida. And I've noticed, if you guys remembered last night on the live stream, Brickell was absolutely packed. I mean, there was so many people in Brickell last night. It was unbelievable. And I think that's because as we start to get into the fall and the winter, the snowbirds are probably going to start to come down. So Miami is also very seasonal, and I think it'll probably stay that way for some time. But one of the topics on tonight's stream, we are going to talk about Ken Griffin, which is the founder and CEO of Citadel Securities. He actually came out with a couple of things, a list of all the things that he wants to do for Miami, Florida, the city of Miami, as he relocates his massive hedge fund from Chicago, Illinois, down here to Miami. Now, we're going to be walking to the construction site where they are going to be breaking ground on that brand new building. But for right now, they have a temporary office in the 200 Southeast Financial Center, right in the WeWork. But what he wants to do is invest a ton of money into education, into the public school systems here. Because to be fair, one of the main criticisms of Miami have been that the public schools are not as good as, let's say, in New York or New Jersey, and the educational system isn't as robust. So one of the things that Ken Griffin said is he wants to make Miami, Florida a hub and known for education, right? If you think about some of the major places in the United States where a lot of the innovation has come from, you'll notice a lot of the top tier schools are in very close proximity. Right? If you just think about New York City, I mean, you have 2 Ivy League schools in close proximity to New York City, one of which is in New York City, in Manhattan, which is Columbia University. The second Ivy League school that is in New York is Cornell University, which is in Ithaca, in upstate. So one of the things that Ken Griffin was saying is that if you want a sustained and capable and educated talent pool, you need to invest heavily and aggressively into education within those communities. So Ken Griffin is already starting to talk to some public officials here in relation to investing into educational infrastructure at the public school level, but also some of the private and charter schools, which I think is really exciting for the city of Miami. I think that's fantastic. I'm assuming over the next, let's say 10 years, Ken Griffin is probably going to be investing billions of dollars into STEM education to encourage students to take on computer science, math. So I think that's very encouraging. You know, a lot of I think I already told you guys, but I was looking at, you know, a second city to live in, and I settled on Miami. But one of the things that was sort of holding me back before was exactly that. Okay, the educational infrastructure isn't there, and that's why a lot of the top, you know, developers, and especially if you have a family, that's probably one of your top concerns, right? How are the public schools? How is the education system? So if you know that a guy like Ken Griffin is not only going to build a multi-billion-dollar building here for his employees, you probably can consider that he's going to invest a sizable sum of money into the educational infrastructure, probably partnering with the University of Miami and the like. So all good things in the works, all good things. Hey, Teresa Diaz, thank you so much for the very kind $10 donation. You are way too kind. Says hello to all of Tom's team. Good to see you, Teresa. Hopefully you're enjoying the beautiful Miami stream. It is finally October, which means it's not going to be a 90 degrees and 100% humidity all the time. It's actually very, very moderate temperature tonight. But thank you, Teresa Diaz. I appreciate it. George says, Tom, have you been to the Panorama Tower in Miami? At the top, it lights very... Ooh, so George, I have. I haven't been inside. Oh, Panorama Tower. I'm thinking of the Paramount building. I don't think I have. Where is that, by the way? Hey, Joan is here. Says hello, Tom. Welcome. Greg is here. Is just walking in the Miami room. Greg, good to see you. We are headed towards Brickell. Joe says, what will happen to the prices of some homes now since the hurricane? So the hurricane, thankfully, thank God, didn't really hit us here in Miami. That's more on the west coast of Florida. So you can think about Naples, Florida, Fort Myers, and there was a lot of devastation there, unfortunately. And talking about valuation of those homes, and I mean, unfortunately, from the videos that I've been seeing, a lot of those homes aren't even there anymore. It's very much reminded me of Hurricane Sandy. Hey, Van is here, welcome. Yeah, Travelnista says the LAUSD got hacked, security is horrible in LA. Yeah, we covered that when we were talking about cybersecurity on our stream. Now, one of the things I always say is, you know, not only from an investment standpoint, but from a career standpoint, you want to look at the industries that have a massive total addressable market, and you want to go work for those industries, not only invest in them. So I think cybersecurity spending is going to continue to persist over the next couple of years. I'll give you guys one more shot of the City National Bank building of the Miami Tower. So everybody, we obviously covered that on Monday, which is tomorrow, October 3rd, the Institute for Supply Management will be putting out their PMI numbers. But on Tuesday, we're actually going to get some jobs numbers. So on Tuesday, October 4th, the Bureau of Labor Statistics will be releasing their job openings and labor turnover survey. Now, many economists on Wall Street are forecasting about 11.2 million job openings on the last business day of August. Similarly to that July total, but job openings continue to outpace the number of unemployed people by nearly 2 to 1. So essentially, for every single job opening there is, or I should phrase it like this, there's 2 job openings for every 1 person looking for work still. Now, I think that number may be a little bit misleading, and I wanted to talk to you guys about this and maybe get some collective feedback, because Tuesday is going to be a very, very important day on Wall Street, especially as it relates to the Federal Reserve, because one of the things the Fed wants to see are some of those job openings coming down to maybe be on parity with people looking for jobs, right? We don't want to see in the marketplace so many job openings with only so few employees to fill those jobs. Because what is one of the Fed's preferred mandates right now? Well, one of the things the Fed wants to do is lower wage pressures and wage inflation, okay? So if you think about a very, very small talent pool, the smaller the talent pool and the more jobs you have, the more bargaining power or the more leverage / negotiating power the individual person has, right? So if I'm interviewing with 5 employers and I get 2 jobs, well, I could sort of pin them against each other and try to increase my salary further. But we have seen a wave of layoffs, unfortunately, as it relates to the technology sector. Okay, we've been talking about Meta, we talked about Okta, and many others. But the way it starts is they start to announce what they call a hiring freeze. Okay, they say, all right, we're going to do a hiring freeze. And then the next step is they say, all right, we're going to do a little bit of a restructuring, which essentially means that they're going to lay people off. So my question for everybody in the chat, and I think this is going to be very useful, is anybody currently right now in the interview process or just finished an interview process, or maybe you are interviewing people for a job, and have you noticed a lot of the people or companies that you've been interviewing with, they've sort of ghosted you and sort of not gotten back to you? And I think, well, the reason why I bring this up, first of all, is because this has happened to maybe 3 or 4 of my friends so far. We're in a group chat and I was sort of helping my friends on some like resume stuff. Anyway, they said they've been interviewing quite aggressively. Things have been moving along, but all of a sudden over the last 2 months, a lot of the people, I should say the companies that they were interviewing with, have essentially just gone dark. Now, it's probably not for the reason because they're a bad candidate. It's probably because of exactly what we're seeing in the market, with everybody is essentially freezing hiring. Massive hiring freezes across the board. And they're probably actually going to look to trim the fat in some organizations, in which case they'll start layoffs. So have you guys been seeing any of that in your world from what you've noticed? Hey, Line Sync is here. Cindy Foley, good to see you. Julia M says, Tom, my company announced a hiring freeze and they cut a project. Also had to rescind offers, says Julia. See, that's not good. So I'll tell you guys a quick story to sort of piggyback off of what Julia is saying. I actually was interviewing with a company called Twilio. This was way back in the day during the pandemic. And once the pandemic hit, they actually rescinded my offer. So yeah, that's not good. So I went through that whole interview process. I was actually gonna fly out to California for like the orientation and things like that. And yeah, they were actually rescinded the offer. Hey, Teresa Diaz, thank you so much for the $2 donation. It says 21,400 subscribers. Wow, that's insane. Well, guys, I appreciate all the support. I never ever would have thought in a million years that we would have Oh my gosh, 21,000 subs on the channel. I mean, that's just ridiculous. I appreciate it, everybody. I really, really do. This has been fantastic. Bax, my company is laying people off right now. Harold says, I was a city bus driver in Washington State and they are doing major. Says Harold, thank you for that. Oh, Julia M says, I'm at a huge company too. UWU says, ELV has been laying people off. Jackie Chen says, some companies only extend offer to one level higher of my role, even with positive interview feedbacks, says Jackie. So it seems like a lot of people are experiencing the same thing then. Maybe it's not just me. Dan Zhang says, Tom, my friend is a manager at Amazon. He was telling me they are also doing some hiring freezes now, but AWS is still doing good. Yeah, I think those specific, I guess, segments of, you know what, we'll cross this way. We never really go down this way. I think there's some very specific segments of the business that'll always be in high demand, right? So for example, at Amazon, you have their AWS. At Microsoft, you have the Azure platform, and Google, you have their Google Cloud. But I've actually been hearing, well, not hearing, I've been reading a lot of articles about how Amazon is actually, essentially during the pandemic, they went on a huge buying spree of a lot of these warehouses to meet the demand. Because during COVID, everybody was just sitting at home ordering a bunch of stuff. So they've expanded massively, and now they're actually going back and reneging on a lot of these contracts and shutting down massive amounts of warehouses just because the demand's not there anymore. Now, we talked about this when we got the consumer sentiment survey out and we got the consumer spending numbers out. And as of right now, the data shows that consumers aren't necessarily, they're just migrating what they're spending on, right? So for example, during the pandemic, everybody started to order things online, order things off of Amazon. But now that the vaccines are rolled out and everybody sort of wants freedom from the lockdowns, everybody's spending on travel, everybody's spending on airfare, vacations. So definitely a big shift in consumer spending. Dre Parks says no more commissions for headhunters. So what do you think that means for recruiting companies? Does anybody in the chat work at a big recruiting company, or maybe you're a recruiter? I think that would be a great data point. I think that would be fantastic if we have anybody in the chat who either works in recruiting or who has experience with recruiting, maybe to provide some insight on what you're seeing in the marketplace right now. Hey, Natalie is here. Says, hello, Tom and team. It's cold here in New York City tonight. You know what, Natalie? It's not super cold here, but it's kind of cool. It's probably, I don't know, 70 degrees and very, very low humidity. So if you're gonna come to Miami, definitely come here October, November, December, January, February, March, and then after that, it gets really, really hot again. But good to see you, Natalie. I see our good moderator, Michelle McGraw, in the chat. Hey, Michelle. Sunshine After Rain is here. Welcome. Hey, Infinite Inspirations says, hey Tom, cyber engineer here, and we actually have layoffs in Google. Wow, lost 3 so far. Jeez. So in the engineering side, you never want to hear that, man. That's and you're a cyber engineer. So Infinite Inspirations. On the stream, we always talk about how I am insanely bullish on cybersecurity as a whole. And I even said many times before, if I had to go back and redo my entire sales career, I would have gone to work at a pure play cybersecurity company, preferably Palo Alto Networks. Now, I've sold some Zscaler products in the past. Hold on, let me cross. These lights are very odd here in Miami. Like the walk sign will never turn. It'll just stay like that, but the light will, I don't understand it. So another follow-up question, do you think, so here's what I was told by one of my old bosses back in the day. And this is what my boss said, and I think it rings true. During a recession, the closer you are to the revenue, the stronger the roof you have over your head. That was the saying he told me. He's like, during recessions, the closer you are to the revenue at a company, the stronger the roof that you have over your head. Which essentially means during recessions, organizations and businesses look to trim the fat, right? Mark Zuckerberg at Meta is doing a complete culling and restructuring right now. And I think a lot of the PMs, the project managers, and the customer success people, I think there's going to be extreme turnover in that sort of the segment. But if you are in a position that heavily impacts revenue, let's say a salesperson or something like that, and if you're performing, during an economic downturn, it's highly, highly unlikely that an organization would fire a top saleswoman or a top salesman. Right? I think it's rather unlikely. So I think now more than any time in history, if you're sort of slacking at your job, I think you got to turn it up. I think you got to tune it up, and because they're going to be looking at performance. I wonder what this is. It says gates to be locked in open position while factory is occupied. Oh, maybe it's only open for a certain amount of time during the day. Hey, Josh C. says Brickell is a great area. My favorite restaurant, Zumba, is in the area. Josh C. Let me screenshot that because I've never been to that restaurant and I want to check it out. Unfortunately, they closed this park. Let's see if we could open it. No, we can't. It's closed. Maximum occupants, 1,241. Well, we're only about 600 people right now, so I think we should be good. Anyway. Jossie says you meant Zuma. Copy that. Infinite Inspiration says it's quite worrisome situation, especially seeing engineers losing their jobs in such high demand positions. Yeah, I mean, software engineering has just been an absolute boom field, especially if you're working in a major city like New York City. I wouldn't really even say Silicon Valley anymore. Well, I would obviously have to say Silicon Valley. But here's what I think they may be doing, and you probably know this better than anybody in the chat. I'm not an engineer. I'm in sales. But you know this better than anybody else. Some of these software engineers are SWEs. TCs. And TC is target comp, or OTE, on target earnings. So some of these senior engineers could be making literally upwards of, $500,000 if you're, a senior software engineer at Google or something like that. And I think management is really looking at that and saying, do we think that this guy or girl really needs to be making, $500,000, or could we hire a more junior or fresh engineer right out of college and pay him maybe, 120 grand or something like that? Now, again, I'm trying to sort of walk a very fine line here, not to overstep my boundaries, because I'm not an engineer. I don't have any experience being a software engineer. I have experience selling software. So if I was the CEO of Alphabet, if I was Mark Zuckerberg, I would definitely look to do the same thing. I would say, okay, if I could have, let's say, 20 engineers that could be just as productive as maybe the top 5 engineers at the company that are making ridiculous target comps, I think I would let them go too. Infinite Inspiration says yes. Infinite says I'm making 180K, it's completely remote. Well, that's fantastic, dude. Congratulations on your success. That's amazing. That's one of the things I try to push a lot on the streams is, a lot of the times on social media, you'll see a lot of this junk. And I'm like, guys, you can get a very, very lucrative paying career if you just follow the right trajectories. You just got to follow the industries that are growing, right? And that's why I always harp on cybersecurity. Because do you think that governments state, local governments are going to increase or decrease their cybersecurity spending over the next 5 to 10 years. Well, being with all the cyber attacks that have been going on, I think we just had Suffolk County, New York get hit with a massive cyber attack. We just had Uber, obviously they're a company, but just get hit with a cybersecurity attack. So when you're prioritizing your spending, your IT budgets, the first thing that you're going to prioritize is necessary critical infrastructure. And I sort of explain it like this, and I don't mean to ramble, but because I've sold all types of products. I've sold software, I've sold hardware, everything in my career. And as I have been in the enterprise level or enterprise sales, right now, so I would say tail end of September, early October is when a lot of enterprise customers, so you can think about like Fortune 500, Global 2000 customers, this is when those companies are doing their budgets for the next fiscal year. And when you have a huge economic downturn like the one that we're going through right now, they look to cut everything. So do you want to be in a position where you're selling a piece of software that's not necessarily a must-have in an organization? Maybe it's only a nice-to-have. Or do you want to be selling critical zero-trust cybersecurity software, right, that they need? So I think if I had to do it all over again, I would sell a product that is a must-have, that's almost recession-proof, and that it almost is a necessity. And if you just look to these sort of industries, you know, you can get very lucrative paying careers, you know, go into a very affordable college, you know, you don't have to spend a ridiculous amount, or you could even do a coding boot camp or something like that, and you can land a pretty lucrative job in tech. Anyway, this is the SLS Lux, which is a beautiful condominium. One of the things I like about Brickell is all the buildings are extremely colorful here. Quite unique. Hey, War Walker's here. We have a fellow Miamian. War Walker, which part of it do you live in? I forget. Hey, Rockstar says there will always be job opportunities there. I agree, Rockstar. Rockstar says cyber and healthcare will always be the hottest industries. Yeah, I mean, especially in America, I think Rockstar has a pretty good point. Now, there is a little bit of a depressing side here on the healthcare bull thesis, just because America tends to spend, I think, whenever I don't really know a statistic, I always like to have you guys fact check me in the chat. Could we actually do a fact check on this? Is America the #1 country for healthcare spending per capita? I think we spend more money per capita on healthcare than any other country in the world. Is that true? I don't want to throw that out there if it's not true. I think it's true. We'll leave that at a tentative right now. But I think that is true. And one of the reasons is because I think, unfortunately, right, not to be insensitive, but America is a very unhealthy country. Unfortunately, that's just the reality of it. So I think we're going to continue to see healthcare spend balloon. But the good news is, I think when we think about healthcare spending, I think a lot of that is going to go into innovative technologies within healthcare, like remote patient monitoring, which are actually some of the solutions that I sell. Tim Flynn says liberals love fact check. Infinite Inspiration says, yeah, I went to Drexel University for 4 years and got my BS in computing security technology. Hey, awesome, man. But I've got a coworker who's got a BS in accounting, making more than me with the certification. Yeah, Infinite, dude, I've heard so many of those stories. All right, so I used to work with this contractor from SoftBank, and this was at the time when SoftBank had a very, very sizable investment in the telecommunications company Sprint at the time. Now, Sprint is no longer in operation. It obviously merged with T-Mobile. I think that's a little bit of fake news too. It technically didn't merge with T-Mobile. The company was going to go bankrupt and T-Mobile essentially bought them. It was a very large merger deal, but it was essentially T-Mobile taking over Sprint, which actually turned out to work quite well because Sprint has a lot of that lucrative mid-band spectrum. So if you think about like the very, very necessary spectrum bands that are most useful to a 5G network, it just so happens that Sprint had a lot of those very lucrative and high-valued mid-band spectrum. But anyway, so I was working with a consultant from SoftBank, and I forget what restaurant we were eating at. It may have been Del Frisco's in New York. I took one of the teams out, and he was telling me that he landed this really lucrative consulting job with SoftBank, obviously overseeing one of the big investments that SoftBank had at the time, which was Sprint. And he was doing some network security for Sprint. I think it was like, I forget the exact role, but he was telling me, he's like, yeah, I don't have a college degree. I have an associate's from this community college, and I took this sort of boot camp and certifications, and one thing led to another, and I just landed this massive lucrative role at SoftBank, being a consultant. And for those of you who aren't familiar with SoftBank, SoftBank is a very large Japanese conglomerate led by Masa-san. They have two major investment arms, one of which is the Vision Fund, which hasn't been performing well at all, and they are known to spend a lot of money, maybe not as wisely as they should. I'll just leave it at that. But yeah, I mean, you can totally change your life by dedicating 8 weeks of your life, maybe a half a year of your life, to just taking a coding boot camp or getting a certification and landing a pretty lucrative role. So Greg Peters is WeWork guy. So Adam Newman is the WeWork guy, but he SoftBank also had a pretty sizable investment in WeWork as well. You're right. In which case, they had Marcelo Claure, which was my old CEO, take over and run the operations of WeWork. But I think Marcelo actually quit. I think he's no longer the chairman of SoftBank. I think he's doing his own thing. I forget what he's doing. He may be down here in Miami now. I know he has a unit in the, what's it called, the Jenga building in New York City. I know he has a apartment there, but I haven't seen him in a while. Hey, Allison Williams is here. This is 242 Freeport, Bahamas in the house. Welcome. Deep Value Alex is US $11,800 healthcare spending per capita. Number 2 is Switzerland at $7,000. Wow, so I was right. And I think that's only going to balloon as well. And sort of as I think this is going to really put a big hurting on a lot of pension funds' liabilities. And this is sort of what we saw happen over in England when the Bank of England had to intervene here. Ooh, I think that guy took a bad spill. But yeah, we covered that in last night's live stream. I'm surprised that there's a lot of people out tonight in Brickell. Hey, Carson is here. Says evening, Tom. Carson, how is the? I saw your message about your networking event. Curious to see how that went. So those networking events are very good to go to, especially if you're looking for a career in investment banking. But you need to be very, very critical of your time, because a lot of times those things could be big time wasters. So hopefully it went well for you. Style is here. So many beautiful people. Good to see you, Style. Once again, before I forget, I sort of talked about this at the beginning of the live stream, but at the conclusion of this live stream, I'm going to post that Barron's article in the Discord. And I think it's so critical that everybody read that specific article, because it talks about the Fed pivot. And you guys know where I stand on this. I do not think the Federal Reserve is going to pivot. However, this Barron's article sort of gave me a little bit of a different perspective, which I'd like to share with all of you. because the Bank of England had no plan to pivot at all. They were forced to pivot because the financial system literally stopped working. So they were interviewing some major managing directors that were heads of credit at some major banks. And their thesis is that the Federal Reserve is not going to pivot, but they will be forced to pivot, and they actually gave us some of their predictions. Now, again, these aren't my numbers. This is coming from this article, so this isn't like I'm saying this. This is just speculation. I want to know what you guys think. So, many managing directors, especially as it comes to big MDs that run big bond funds, they think when the US 10-year Treasury yield gets to about 4.5%, that is when the market, something's going to break, in other sense, which in case you'll probably have like a credit freeze or something like that, in which case the Fed will be forced to step into the market and start buying bonds again, providing liquidity. Now, if you remember, oh, this is a pretty good view here. If you remember earlier last week, when I think all of the major equity indices were down big across the board, that was, I think, maybe Tuesday when we had that massive waterfall sell-off, when we actually cracked the lows in the S&P 500, the Dow Jones, and the NASDAQ all in the same day. The 10-year U.S. Treasury yield that same day, well, the bond sold off with such force. For a brief moment, I think in after hours, that 10-year U.S. Treasury yield reached 4%. And from there, the dollar came down a little bit. Somebody got in there and started buying bonds. So maybe it was the Fed, maybe it wasn't. But a lot of people on Wall Street are saying that it's going to be the Fed's Bank of England moment, if you will. Now, I'm not sure how true that is, but I think we're sort of stuck between this rock and a hard place as it relates to monetary policy, because on one end, the Federal Reserve has a mandate to get inflation back to its 2% target. But on the other end, in order to do that, it's probably going to create a complete credit freeze. Now, granted, I will give a little bit of context here. We talked about this before, but the reason why you really started to see the pound sterling crater is because politicians thought it would be a great idea to start cutting taxes and throwing kerosene on this inflation fire. This is definitely not the time to do that, especially if you're subsidizing that with debt. Probably not the best idea. And right when they announced that, it started to throw currency markets through a ring of fire. And Bank of England subsequently had to step in. Now, we're probably not going to have that issue in the United States, because the difference between us and them, I should say pretty much everybody else in the world, is that the US dollar is extremely, extremely strong on a relative basis. Okay, and that's been putting extreme pressure on emerging market countries and emerging market companies. So I think the United States is in a little bit of an interesting position here, where essentially our gain is the rest of the world's problem, which is not the best thing that you want to see. But essentially here in the United States, we have the luxury of having our strong dollar essentially put a lot of pressure on emerging market countries, especially those that have extreme dollar denominated debt. Because obviously, as the more dollar denominated debt you have and the more your native currency falls, well, it's going to be increasingly harder to pay off your dollar denominated debt, in which case you may need to cut back on necessary infrastructure spending in your country in order to allocate more resources to paying the notes on your debt, which is not good. Hey, DZ Power is here. What's up? Good to see you, DZ Power. Says hello, everybody. Good to see you. NPC 007 says a lot of trailer parks in Fort Myers got destroyed. Yeah, I was looking at a lot of that footage. It's heartbreaking over there, man. It's heartbreaking. Travel Nieces says Miami looks like fun. Michelle McGraw says Tom needs a member that says pivot. Hey, Caroline, thank you so much for the support. I appreciate it. Tin Man is here. DJ's Reviews in Under 2 says, hey Tom, what is your opinion on Dave Ramsey? Is he worth looking into? Yeah, I think that Dave Ramsey is a really... So I'll say this, if you listen to Dave Ramsey, you'll be fine, but you'll never sort of really... I'm trying to figure out how to word this. So Dave Ramsey is like basic finance 101, right? You're probably never going to go bankrupt if you sort of listen to his advice. I think he gives great advice for the average person, right? Not acquiring debt, don't run up a credit card balance, and save your money. And don't use leverage, which is great. And I think if you listen to Dave Ramsey, you'll sort of understand the basic principles of finance, of budgeting and things like that. But if you want to be like a little bit more advanced, maybe if you're trying to break into the hedge fund business or something like that, well then I think a lot of things that Dave Ramsey says just wouldn't be applicable to your world. Because if everybody listened exactly to what Dave Ramsey said, you know, you wouldn't have any Mark Zuckerbergs or Elon Musk or anything like that, right? Dave Ramsey is all about zero risk taking. Like take no risk and just buy a bunch of mutual funds. And look, I think Dave Ramsey is a great guy. I think some of the things he says I disagree with, but I think that's fine. I think it's good to disagree. He's much wiser, older, and he's been through a lot more things than I have. So I guess that's what I would say about that. He's all about if you want to buy a home, you have to do it with cash. But he would prefer to do it in cash, I think, which I think is unrealistic for some people. But he's not against using leverage, I don't think, to buy a home, but he is against purchasing individual stocks at all costs, right? Which essentially, if you're managing money, is not a reality. And I think this will actually tie into an interesting conversation that I wanted to bring up on this stream, where Michael Burry, who is the very famous gentleman who predicted the 2008 financial crisis. Now, one of the biggest bubbles he's predicting right now is the passive investing bubble, which is, you know, everybody just buying and dollar cost averaging into the market aimlessly, regardless of valuation or regardless of anything. Now, to a point, I tend to agree with Michael Burry about that. But at the end of the day, I think that, you know, studies show that if you just dollar cost average into a very, very low cost index fund that tracks one of the major indices like the S&P 500, the NASDAQ, or the Dow Jones Industrial Average, that, you know, roughly you'll get a return of, you know, anywhere from 5 to 7%, which is fantastic. But I think that, you know, a lot of that trade could be very crowded. So in the hedge fund business, oh, look at this dog, man. So nice. In the hedge fund business, there is a terminology called crowdedness, where if everybody is too stacked on one side of the trade, there's really no alpha in that trade anymore. Now, I think for the average person, just buying an index fund or a basket of stocks is fine. But if you are in the investment business to try to generate alpha, right? So let's say if you are raising money to start a fund, essentially your alpha would be any performance or outsized performance over your benchmark. So many hedge funds are benchmarked against the S&P 500. So let's say if the S&P 500 goes up 20% in a year and your hedge fund returns 22%, well, your alpha is 2%, right? Any sort of return over your benchmark is your alpha. And a lot of people get very rich in the investment business. So I think by just saying broadly that you should never have individual investments, you should never try to grow a sizable real estate investing portfolio, I don't think that's the best advice, but I think it's good advice for the vast majority of people. But if you ever really want to go for it, you're very entrepreneurial and you really want to, try to push things, then you got to use leverage. You got to, invest in individual companies, and you got to start your own businesses too. You can't just, I don't know. I don't want to be too negative on Dave Ramsey. I think everything he says is correct, but I think that if everybody listened to what he said, there'd be no entrepreneurs. There would be no innovation. Everybody would just be, moseying on at a job, not trying to go big and get into these lucrative careers like software engineering or tech sales or anything, right? It would just be, be a hermit and invest 20% of your savings and go hide in a corner. So. So this is South Miami Avenue. We'll make a right here because we have to go see Citadel Securities. Hey, Lewis, thank you so much. I saw a good comment I wanted to read. Prince Ice says most people disagree until the result comes. Most take time until the end. I say it's our own choice who or what to believe and hear before to come to conclusions. This is Prince Ice. I would agree. Dan Zhang says if you listen to Dave Ramsey, you are living for the retirement date to come, but you'll miss out on a lot of things in life. Yeah, I think it's just, and that's fine. I don't think there's anything inherently wrong with that at all. Some people have different goals. I think people are wired differently. Like Ken Griffin at Citadel, right? We're talking about him today. He didn't take the Dave Ramsey approach, all right? And if Ken Griffin from Citadel Securities just listened to Dave Ramsey, he wouldn't have started a quantitative hedge fund and be probably the #1 market maker on Wall Street, right? He would just be dollar cost averaging into the S&P 500, which probably wouldn't make him worth close to $4 billion or whatever he's worth, probably worth more. So again, I think Dave has even said this on some podcasts. He's like, look, if you listen to our advice, the baby steps, I think it's called, you'll get wealthy, you'll be rich, right? Especially if you start young. If you do the right thing, if you're not derelict in your duties, if you go to work every day, you work hard, you save 20% of your income, the only thing I disagree with him is buying mutual funds. Mutual funds are generally a ripoff, but anyway, you'll probably be worth a couple $1 million, which is fantastic, and you'll retire with dignity and you'll have a very nice life. But some people want to try to start a business. Some people want to, try to build a software company. Some people want to, open their own, practice. If you're a doctor or something, I don't know. Some people want to be other things. Some people want to go for it, in a sense, right? So I would say Dave Ramsey is basic finance 101. Yeah, Dan Zhang says Michael Burry would never deploy the majority of his funds into buy credit default swaps in 08. Yeah, like again, and there would be no Ray Dalios, right? There would be no exceptional people out there if, you didn't really go for it. But so I want to ask you guys, nice Tesla right here in front of us. Do you think that there's a potential bubble in the ETF business or passive investing? Do you guys think that? What do you think? Hey, Cynthia Beal is here. Good to see you, Cynthia. Hey, Zozo Bob, welcome. Well, if you guys are enjoying tonight's live stream, feel free to... Hold on, what is that? Leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami. And we'd love to have you guys along for the ride with us. Also, I promised you guys that I would be putting up my deep dive chart analysis. So usually over the weekend, I go through a large number of charts, which I post on my Twitter. So I do have that up there if you follow @WalksWallStreet. I'm going to be posting that usually every Sunday night. But this week I posted it on Saturday just because I didn't have time to do it tonight. Hey, NPC 007, welcome. Warwalker says, I want to retire, move to Norway. Love that. I saw a comment that I wanted to read. I think I passed over it. Let me see. Somebody says, hey everybody, what are your thoughts on VOO ETF? So VOO is an ETF that tracks the S&P 500. I believe it's a Vanguard product. So it's an exchange traded fund. It's essentially the same thing as an index fund. And it just tracks the broader performance of the S&P. Quickly, we've been sort of getting sidetracked. So Friday, this week is going to be very important. Number one, we have the ISM manufacturing numbers, the PMIs coming out, which is essentially a live look at the business cycle. So tomorrow night on the live stream, we are going to be going through line item by line item that Institute for Supply Management Purchasing Managers Index report. But on Friday, this is very important, the Bureau of Labor Statistics releases the job report for September. Now, consensus is an estimate for about 250,000 increase in non-farm payrolls. The unemployment rate is set to be non-changed at about 3.7%. And I think in August, non-farm payrolls came in roughly at 315,000, which I believe beat analysts' expectations. So I think the reason why this non-farm payroll number is going to be exceptionally important is because we got some pretty egregious inflation data out on the PCE. And one of the things the Federal Reserve has been saying is that they do not want to pivot on their monetary policy too early. The only way they would pivot on monetary policy to go from quantitative tightening to quantitative easing is if they start to see a material change in the inflation data. And we actually got the polar opposite of that when the PCE came out. We actually had an acceleration in inflation. And it's important to pay attention to the non-farm payroll numbers because that will give us a glimpse into the health of the job market. And if the job market is still running white hot and there's two jobs for every one person looking for work, well, that's going to add a lot to wage inflation, which is not good, in which case will probably result in the Fed being way, way more tight in their monetary policy, at least until something blows up and they're forced to step in. So we have to look out for those jobs numbers. Cynthia Beal says, garbage in Miami, impossible. I saw a garbage can. Yeah, we tend not to have too much garbage in Miami. It tends to be a very clean city. Tim Flynn says, come on, Tom, it's bad and going to get much worse. Yeah, I mean, I think as it relates to the equities market, what my consensus has been for quite some time is don't fight the Fed. So long as we are in a quantitative tightening cycle, you should be risk off. It almost seems like it's too simple, right? It almost seems like it's too simple. Because if you listen to people like Paul Tudor Jones, Stanley Druckenmiller, the first thing they say in any of their interviews, if you study their interviews when the journalist is asking what are your thoughts on the market? Where do you think the market's going to go? The number one thing they always say is, well, we're in a quantitative easing cycle. I think the markets will probably go up and corporate profits will continue to accelerate. But anytime we're in a tightening cycle, quantitative tightening, just don't fight the Fed. Risk off. And I think that's going to persist. Now, the other thing I'd like to say, because I know sometimes I tend to be too optimistic. Some people want me to talk doom and gloom. So I try to balance our topics to just the right amount of depression and just the right amount of optimism. So for all of those negative Nancy's in the chat, I'll give you what you want. And the people that want to look on the bright side, I'll give you what you want too. And I think that's good, just so we don't fall into like a cognitive bias. So the bad news is, I think the vast majority of these declines in the equities markets, as it relates to across the major indices, I think have been mainly due to higher interest rates. Now, you're probably thinking, well, duh, that's obvious. Yeah, well, there's usually two pieces to the puzzle here. And this is, as we go into Q4 and as we go into earnings season, you guys are going to start to see this in real time, because we're going to start to see it on the streams and we're going to cover it. So analysts, portfolio managers, and the market in general will start to discount names based upon the deterioration in the value of future cash flows. Okay, so generally speaking, as interest rates go up, the future value of those companies' cash flows go down, especially for very high beta tech stocks. Now, I don't think that many analysts or even the market in general has priced in earnings recession into this market. And I believe that once they actually do start to price in an earnings recession, then this market could go substantially lower, maybe another 20%. And you're just starting to see earnings revisions for the S&P 500 go down right now. If you look across the board, you're starting to see major analysts report 4% declines in total EPS for the next fiscal year. I think that could suffer materially or substantially, especially if the US dollar continues to remain strong. So if the US dollar continues to remain strong, I think the statistic is about 40% of all revenue of S&P 500 companies happen from abroad. I think. You guys could Google that, fact check me. But I believe it's about 40% of all the revenue in the S&P 500 comes from abroad. Well, why is that a big problem when the US dollar is crushing every single emerging market currency? Well, the reason why it's a problem is because it weighs on earnings. So when you go to convert your sales in emerging market countries back to US dollars, well, you're going to get a lot less US dollars. And this is actually why we're seeing higher inflation in places like Europe in general, some Latin American countries, is because companies in the United States are trying to maintain their gross margins and their profitability. And the only way to do that is to raise prices in their native currency, right? To try to keep things stable there. So we could have a pretty hefty earnings decline, but we'll see. Hey, Julia M says it's obvious because companies can't invest in new projects and they will start to lay off. Yeah, that's true. That's very true. You know, as interest rates go up, to Julia's point, companies may be reluctant to take on debt to invest in their business, to hire new people, because debt is more expensive. We've been living in an environment of artificially suppressed rates where companies can essentially take on debt in perpetuity. So that's a very good point. Very, very good point. All right, we're coming up. I want to make sure we're not. I think we actually have to make a left here. It's one more. It's one more, I think. We'll go up one more. Hey, Brian Forrest is here. Hey, Brian. Happy Sunday. I see my buddy Fred X is in the house. Good to see you, Fred X. Lee Z says S&P 500 is going to drop another 30%. So I think here's another thing I'd like to say. I've been monitoring, and this is going to sound crazy, but Twitter is a very, very good place to gauge market sentiment. Now, you wouldn't really notice this, but there are a lot of, high name money managers that are on Twitter. And every single idea that I'm seeing on Twitter right now is bearish idea. So if you follow me at Walks Wall Street, even myself, I probably tweeted close to 20 charts, all with the bearish bias. So we could be getting near some sort of a short-term bottom maybe, because sentiment is getting very, very bearish here. And I've noticed it in the chat too. Now, this doesn't necessarily mean you take the side of that trade. It's just something to be cognizant of and aware, right? Because if I had to do a poll, we'll do an impromptu poll right now in the chat. I think this will be interesting, and give your honest answer. Do you think the S&P 500 is going to, from the point where it is right now, do you think it's going to end higher or lower come the last trading day of the year? What do you guys think? I think this is actually going to be a very, very helpful poll if everybody is honest about it. So I'm going to say it's going to end lower. So what do you guys think? And again, this is from as of today's futures contract, wherever it's trading at right now. Do you think by year end we will be in a higher position, or do you think the market will be lower? Julia M says lower. Austin City Limits says I think it's going to be higher 100%. Cindy Foley says lower. Disney Hatch says, hey Tom, I think it's going to be lower. Okay, so we pretty much have everybody. Oh, Bob says neutral. Sabrina Fair says lower. Cynthia Beal. Jeff says lower. Brian says higher. Troy says lower. So we almost have everybody saying lower. Carson says lower. Shadow Stocks is lower. So think about this. I'm going to timestamp this live stream. And when we do our New Year's Eve live stream in New York City, I think it's going to be interesting to come back to this stream. Jared, we hear you, man. We see your chats. So think about this. And again, this is very, very anecdotal data because we have about 700 people in the chat. But it seems like the vast majority, could we say about 80% of the people in the chat, including myself, think the market will be lower by the end of the year? The ABX girl thinks it's going to be lower too. I think this is something to be aware of. I think this will be an interesting sort of psychological experiment as we look back on this. Because sentiment is getting very, very bearish, very, very negative. Let me cross the street. Because I believe a viewer wanted me to show the Panorama building. So this is the Yacht Club at Brickell. I think this is one of my favorite locations in Miami. This place is fantastic. You have the Hyatt Centric across the street. And then here's the very famous Panorama building, which I believe is the tallest residential tower in Miami. Wow, that looks amazing. Hey, Deep Value Alex is here. Good to see you. What's next is after midterms, the peanut butter is going to hit the fan. All right, now we will head over to our pal, Citadel Securities. It's crazy how all-in-one in Brickell you could go from insane, loud sort of party scene to more relaxed. I think I like this part of Brickell a little bit better. A lot of very nice apartments. All right, I'm gonna give you guys another piece of good news. I hate to do it, but I'm gonna give you guys some good news. Now, I think this is good news from a perspective that for the average everyday American, including myself, right? Well, one of the things that we've been getting absolutely hammered and crushed on is shelter costs, right? And shelter costs is probably the number one, if not the number two thing that the Federal Reserve is looking at to say, look, as long as shelter costs stay extremely elevated, there's no way in a million years we would think about any type of material pivot here. So, hold on, let me go around the curve here. I believe this vacant lot is where we are going to have the brand new Citadel Securities building. So as of last month, hold on one second. So as of last month, monthly rents have actually declined in August for the first time since December of 2022, declined 0.1%. And I've been saying this, that I think rents are going to come down. And I think housing prices are going to come down. I don't think they're going to crash. I do think you're going to see very, very specific subsegments of the market that were really, really turbocharged, like Phoenix, Arizona, like Austin, Texas, maybe some parts of Florida that essentially had 24 months of home price appreciation pulled forward into 12 months. I would even maybe argue 36 months. I think those specific markets are going to see a sizable correction. And by sizable correction, I'm talking about 15 to 20% declines. Now, that may sound like a scary number. However, if you go on Zillow and you look at some of these homes that people are, the money that people are trying to get for these homes, it's like these prices aren't real. And I think you guys could agree with me on that. It's just like, it's ridiculous. You know, they're asking almost $600,000 for a 3-bedroom, 2-bathroom home. That's just, to me, that's not a real price. I chalk that up to being, that's not a real price. So I think a lot of that stuff is going to just come down to trend. You'll probably just have a big mean reversion trade. And usually what shoots up, you know, you usually have an overthrow of irrational exuberance buying, which we've had. And I think now that mortgage rates, some people are being quoted 7%, I think that's going to come down substantially. James Tigers has totally agreed. Good to see you, James. So everybody, I think this is it. This is the highlight of the night. Hopefully you guys are excited. I think in this big vacant lot here is where our friend Ken Griffin, let me see if I could stand up here so you guys can see it a little bit better. I think this big vacant lot is where Ken Griffin will be breaking ground and building his new office tower for Citadel Securities. Now, I believe Ken Griffin came out with a statement that he is actually going to personally try to convince some major companies to sign long-term leases in his office tower. I think one of those is Apple, but again, that's just a rumor. But supposedly it's going to be right here, which is right on the water. Definitely has a nice view. So from the Citadel Securities Tower, over here is the very famous Brickell Quay, which we actually walked a few nights ago on the live stream. So amazing views you're gonna have. This is absolutely gorgeous. Hey, Zozo Bob says, Tom, Ken Griffin said his tower will cost about $1 billion. It's insane, dude. That's just, I can't even fathom that. Well, I mean, it's definitely gonna have $1 billion view. I mean, if you could see Brickell Quay, assuming it's gonna be tall enough, oh yeah, it'll definitely be tall enough to see over these buildings. So you're probably going to see the entire Brickell, downtown Miami. And for context, we started off on our stream right next to the Citigroup building. So right to the left of that is the 200 Southeast Financial Center. That is where the tower is going to be right here. You will be able to see all the way to South Beach, which is insane. I wonder when they're going to break ground on it. It's going to be cool to do these live streams because we're going to literally see the tower being built in real time. Oh, Dre's is 2nd Street. Shivas is totally ridiculous. Oh, Dre says, I lived there all my life. I walked it. Nice. Very nice. Here, we'll walk a little bit down here just to show you guys the neighborhood. We very seldom come down here on the stream, but Cynthia Beals is right on the water. I wonder so many tall buildings so close to the water. Yeah, I mean, another concern for me, I think we've talked about this before, but Sunny Isles Beach, Florida is just north of here. And if you remember from the New York City live streams, we always stream from Billionaires Row, which is 57th Street. And essentially, Sunny Isles Beach is supposedly, well, it is the quote-unquote Billionaires Row of Southern Florida. You have very name brand towers there, such as the, I believe the Porsche Design Tower is complete, which is just a ridiculous building. And ridiculous, I mean really, really beautiful. And they are breaking ground on the Bentley Tower. It seems like they have a theme here in Miami for naming super tall luxury apartments after vehicles. Hey, Emilio J is here. What's up, Emilio? Good to see you. War Walker says looks like Singapore. It's super peaceful here. I could sit here all day. Love is King, or Kind, says, hey Tom, did you move to Miami or do you go back and forth between New York City and Miami? I technically moved here, but I split my time about 50-50. So 50% of my time I'll be in Miami, 50% of the time. CR asks a good question. Says, Tom, do these car manufacturers get a stake in the developments? I would assume so, but I actually don't know, to be quite honest. I think that's a good question. I would assume so. I know the Aston Martin building and the Porsche Design Tower is if you buy a unit, you get one of the cars. Yeah, Warwalker's like, get a condo there. I wish. If only. Hey, Rex A says, hello, Tom from South Carolina. Good to see you. What's up, Rex? Thanks for joining. Beautiful night. This is the best weather in Florida. It's not humid. Hey, Retired in Florida says, hello, Tom. In your opinion, will the prices of undamaged homes in the southwest portion of Florida increase or decrease in value? Would you buy a damaged waterfront home in Southwest Florida? So I wouldn't, and I think I've said this before, but I think it's good to sort of review it again. I think I can get out this way. Let me see. Yeah, I think we can. I think if you're going to buy in Southern Florida specifically, or Southwest Florida, beautiful dog. Favorite. I think it's important to buy in a non-flood zone. So the flood zone that you should be looking for is flood zone X. And just for me personally, because I have experience, you know, having family from the South Shore of Long Island, I am very, very familiar with flooding and water and Hurricane Sandy. So you really, really want to make sure, especially if it's your first investment property, if you're just getting into the real estate investing game in your first duplex, triplex, or maybe even a single family home rental, do not buy waterfront property. That's for maybe if you got a couple mil in the bank and you want to mitigate your risk if you sort of pick up what I'm putting down. And here, I think Southern Florida is great for real estate investing, but I think you got to be very, very smart about it. And if you were going to buy in Southern Florida, assuming you're not, if you buy a condominium and you want to, live in it half the year and then rent it out half the year, that's fine because you're going to be 80 stories in the sky. But if you're going to buy a duplex, triplex, fourplex, or even a single family home on ground level in Florida, you really, really have to do your due diligence to make sure that whatever street you're on or your property is never flooded before. And there's a couple ways you could do this. I'll tell you the way that I did it. So for me, I pulled all of the FEMA flood maps, and I refused to buy any property that was not in flood zone X, which is pretty much eliminates 90%, with a few exceptions. And the next thing you want to do is just knock on every single door in your neighborhood and talk to them. Chances are that you're going to have somebody that lives on that block that's been there for 100 years, literally. Their family's been there for 100 years. So I knocked on almost every single door in my neighborhood and was talking to the owners about, hey, I'm interested in this house. I'm coming here from New York. How has the hurricanes been? How did you hold up through Irma? How did you hold up through Fred? Right? On and on. Ask questions. Does this block flood? Does the neighborhood flood? What do you guys think? Right? And they'll tell you. People will tell you. And it's important to do your diligence. And what we saw in 2020 and 2021 was the polar opposite of the buying behavior that you should be doing. Everybody was paying a ridiculous amount for real estate, getting into bidding wars, doing no due diligence. They were waiving their home inspections, which is probably the worst thing that you could possibly do in your life. So if you sort of buy in haste and don't do proper due diligence, it's going to be it's going to turn out very poorly for you. So I guess in conclusion, would I buy in those particular neighborhoods? At this point in my life, I wouldn't, because I'm very early in, building out my real estate portfolio, right? I don't have, multi-millions of dollars worth of real estate. So I want to make sure my risk is as mitigated as possible. And flood risk is very, very real. Very, very real. So hopefully that answers your question. But again, that's just my opinion. And that's what I'd say. Hey, love is kind. So something I'm confused about. Why do states like Florida that's susceptible to hurricanes still build wooden houses instead of concrete stormproof houses? So homes that were built before 1960 in Florida are concrete block construction. So I agree. If you're going to buy a home here in Florida, don't buy a wood frame. Now, that is also a very controversial statement, because I remember we actually had a real estate developer in the chat sort of debate about this and say, no, wood frame is okay. Again, I'm not an engineer, but if it were me and I'm putting my money at risk, I'm not buying a wood frame construction. I'm going to buy concrete block if I'm buying in Southern Florida. But that's just me. I think this is one of my favorite palm trees here. Really beautiful. Hey, Cindy Foley, thank you for joining the stream tonight. I appreciate it. Thanks for coming. But if you guys are enjoying the live stream so far, feel free to leave a like on the video. and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami, and we'd love to have you along for the ride. Oh, look at this sort of massive rock water fountain here. Ooh, Warwalker, thank you so much. It's 10:30. I got to get the bus. My bus comes at 10:47, I think. So I'll take you guys back over the bridge. But I think we covered a lot. We did the day-by-day markets look ahead stream. Now, just to quickly review, the number one most important thing for next week is tomorrow. Tomorrow's the day to pay attention to. If you're gonna hibernate the entire week and not pay attention, do it Tuesday, Wednesday, Thursday, and Friday. Don't do it tomorrow, because tomorrow, the Institute for Supply Management will be releasing their Purchasing Managers Index. Okay, and that is literally a live look at the business cycle in real time. So tomorrow on the stream, we are going to be doing a deep dive into that report. I'll print it out. We'll go line by line. And obviously, as you guys know, the most important thing about that report is what the respondents are saying, right? So you have a live look into what the top manufacturers in the United States are saying. They're telegraphing to you what's going to happen in the United States manufacturing sector. Is it going to be growing? Is there a lot of orders canceling? Is inflation persisting? Is supply chains healing? We're going to find that out tomorrow. So that is extremely important we pay attention. The most important thing, though, to pay attention with that, obviously any reading signals growth in the manufacturing sector. A reading below 50 signals weakening or deceleration. But it's not so much the number, it's the trajectory of those numbers. So are we going from 50 to 52 to 55 to 56 and going up, or are we going from 58 to 55 all the way down to 52, which we've been doing? Had subsequent equity declines in tandem with the rolling over in the PMIs. We're also going to get the jobs numbers out, those non-farm payrolls. If non-farm payrolls come in hot, I think we're going to have a massive sell-off in the equity market, because that will signal that the Federal Reserve is going to continue to tighten. And make sure you all watch that bond market. I always like to say, if you want to know where the stock market's going to go, don't even look at the stock market. Keep your eyes peeled on the debt market or the bond market, because the bond market or the stock market derives its value or is a derivative of the debt market. And if we have a massive sell-off and instability in the debt market and yields spike, we are going to probably see stocks fall in sequence or in tandem. All right, I think we're making good time. Could we get a quick time check in the chat? I always lose track of time. We've already been streaming for 2 hours. I thought we were only on hour 1. Somebody says, how's the battery? I think I'm on 15%. I think I'm actually pretty good. Oh, but I took your guys' advice. I want to thank everybody in the chat. You guys have been hammering me to get a battery pack. I finally did it. I got it. Now, part of the reason why I got it is because of Hurricane Ian. But I bought a battery pack which could potentially charge up to 6 times, I think. So I think we should be good on these streams. Hey, Dan Russell, dude, what is up? No way. Look who it is. We got Dan Russell. Good to see you, Dan. Oh, man. Well, at least we'll end the stream with the bang. We're about to see a pretty interesting yacht or a boat or something going up. But I think that means I'm gonna miss my bus. That's all right. Drawbridge is gonna go up Sunday night, no big deal. But yeah, I think that's another thing. If you live in Southern Florida, buy a battery pack, because if the power goes out for a prolonged period of time, you're gonna need to conserve your battery on your phone so you could contact your family, stuff like that. So as we walk over the bridge, check this out. One of my favorite buildings in Miami, the Aston Martin building, absolutely gorgeous. Dusty Cole says, glad to catch the streams, bro. Hope all's well. Yeah, everything's going good. Thank you for asking. Everything's good. Ready for the week, ready to attack tomorrow. Attack the week ahead. Gonna get after it. It's gonna be a busy week. Non-farm payrolls, ISM manufacturing numbers, big stuff. Also, maybe doing some traveling, so just be posted on my YouTube community page. I will keep you guys updated if we are not going to be streaming. All right, let's get a look at the boat that's coming across. All right, here it comes. You guys are gonna get a kick out of this. So I was just like, why does it smell like alcohol? I'm like, why does it like reek of alcohol? I'm like, I don't drink, I don't know, I'm walking in Miami. Well, turns out, I thought I put my show notes in water, and I guess I put it in a huge pool of beer or alcohol someone spilt. So I'm like, why the heck does it smell like alcohol? It reeks. And I put my show notes in a huge pool. I thought it was water because we were sitting by the bay there, but it was smells like champagne or something. Anyway, I'll stop talking. I'll let you guys enjoy the bridge. Oh, what do we got? Not bad. That thing's not too disappointing. You know, as the weather gets more cold, you're gonna start to see some crazy boats coming through here. Warwalker's like, congratulations, Tom, on finally buying a battery pack. We'll be expecting a 24-hour stream. We may do something crazy for New Year's, so stick around if you guys aren't already subscribed to the channel. New Year's Eve, we may be doing some crazy in terms of duration on the live stream. I wonder how many times this thing goes up and down a day. No, so Julia says, Tom, have you been on the boat tour of the mansions in Fort Lauderdale? I haven't. Now, I think there's another tour here. I forget what the island is. Maybe Fisher Island, is that correct? For all of the Miamians in the chat. I think Fisher Island is, they do like a boat tour for all those massive mansions. Dees is in, are you gonna be in New York or Miami for? I will be in New York. So for the holidays, I just go back and hang out with my family. Daryl B says recently, got into crypto trading, something I never thought I would do. So far, it looks good. Invested small amounts. Any new views on that, Tom? Says Daryl B. Yeah, I mean, I think, you know, the only exposure I really have to cryptocurrencies is just Bitcoin and a little bit of Ethereum. I think the vast majority of the alternative coins or altcoins are scams, and they may be classified as securities. So, look, I think in a risk-off environment, the highest risk-on assets are probably going to get crushed. So, I mean, I guess that's all I would say about that. I mean, there's a very, very high correlation between all of these cryptocurrencies to like the NASDAQ, right? So a lot of these very frothy, high beta growth stocks, they're risk-on assets, right? So in a risk-off environment, when we have quantitative tightening, a lot of this stuff gets pounded. Hey, Liquid Nate is here. Dude, what is up? Liquid Nate, good to see you. Always a pleasure to have you in the chat. George has just subscribed from New York. Hey, what part of New York? We'll be back in New York very soon. I may have to go to Frisco, Texas first. I'm working on a big deal with an oil and gas company for intrinsically safe devices. That should be fun. Oh, Deep Value Alex says Fisher Island is more of a ferry boat for people commuting back and forth. Okay, thank you about that. I didn't know that. Now, I know Fisher Island is an expensive neighborhood, is that right? Oh, Westchester County, very nice. So I used to take the Metro North to Ossining or Ossining. I always forget how you pronounce that. Ossining, Ossining. Styles says, Tom, when are you going to Texas? I may be going to Texas. It's probably about a 70% probability Tuesday and staying through Thursday. In which case, if that does materialize, we probably will not be live streaming because I will be doing the whole dog and pony show with the clients and all that stuff, which should be fun. This is the Miami Tower City National Bank. But team, we are now on the other side. I hope you enjoyed the Markets a Look Ahead live stream. Once again, tomorrow is the most important day on Wall Street. We are going to hear from the Institute for Supply Management for those PMI numbers. On Friday, we are going to get the non-farm payrolls out. And one of the main things that we talked about tonight, just in conclusion, is that Barron's article. So if you do click the link in the description, join our Discord, or look in the link after the stream, I will be dropping that link to the Barron's article, which essentially draws out a position where the Fed may be forced to pivot, sort of like how the Bank of England was forced to pivot, being that, you know, they were, I guess, sort of showboating to the market, saying there's no way that we are going to pivot. We are going to be steadfast in quantitative tightening, but they are forced to pivot when the credit markets lock up and you have an uncontrolled sell-off in the debt market, which we saw over there in the UK. So everybody, thank you so much for joining. Please have a fantastic week. And I will see you all in the next one. Zozo Bob, War Walker, Dusty Cole, Sabrina Fair, George, John, all of our moderators, Michelle McGraw, Style, Matt, Austin City Limits, Love is Kind, Deep Value, Alex, Julia, thank you so much. If you guys want to check out my free investing newsletter that I usually write every other Tuesday when the market closes, I give my thoughts on the US equity market, I give my thoughts on emerging markets, fixed income, housing, all that good stuff. Scan the QR code, punch in your email, you'll be signed up for free. It's a good way for all of us to stay connected. But until then, everybody, make it a great week. Get motivated to attack come Monday. And I'll see you all right back here from Magic City, 8:30 p.m. Eastern Time, as we do a deep dive analysis of the Institute for Supply Management Purchasing Managers Index. And to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Everybody, have a great week. Enjoy Q4, and I'll see you next time. Alex Lopez, James Dixon. Oh, James, I want to send you an email. I saw your email /DM. I want to connect. So thank you, everybody. I got to go. Take it easy. Thanks so much.